Hey everyone, it's your boy Cincy, your favorite Forex trader, here with all the good vibes. Today I'm switching things up a bit to show you how I use the technical indicators to assess whether significant economic news like the carry trade effect has run its course. For those who are not familiar with what the carry trade is, kind of like myself, the carry trade involves borrowing in a currency with low interest rates such as the Japanese yen and investing in high yielding assets. This strategy has been popular lately because many investors anticipated that the yen would remain cheap and the Japanese interest rates would stay low for some time. However, last week we saw a sharp reversal as the Bank of Japan's interest rates strengthened the yen, leading to a significant sell-off in the global markets. Despite rumors that the carry trade might still be ongoing, current market trends are showing signs of relief as we move into mid-August. On a different note, don't forget about my 2K account challenge, where I have deposited $2,000 from my profits into a new account, aiming to grow it over 30 trading days. As you can see on the screen, this account is actually already up 150%. Now let's dive into the charts and use our technical analysis to see what insights we can uncover. What's good, people? It's your boy Cincy, and welcome to the chart. So like I was saying before, I was talking about the Bank of Japan and how the Bank of Japan have strengthened their interest rates. And these have affected a lot of American investors who have initially invested at low interest rate of the Japanese yen, and now they are all being forced to sell off their assets. And this has created a global market sell-off. So on the chart here, what you're seeing here is the Japanese index, or the JPN 225, or what we call the Nikkei. And this is what simply shows us how the Japanese economy is doing. So it's kind of like the S&P 500 that shows us all the top 500 companies in the US. The Nikkei does the similar thing for Japan, where it shows us all the top companies in Japan and how the economy is doing. So at the time when we had that news drop a few last week, so you can see this is the market sell-off of the Japanese index. So this was actually a very scary time. So the Japanese index dropped as low as what, 20%, 15 to 20%. And what we're trying to do right now is just to see, is this sell-off over? And one of the best ways to actually know if this is over is to use technical analysis. Technical analysis is one of the surefire way for you to get at least as close as possible to a real-time event or real-time indication of what the trend of the current market might be. And how do I typically use mine? I use mine and by typically looking at two things. The first thing I'll always look at is my primary indicators, and the second thing is my secondary indicators. So my primary indicators will typically go on the charts, and there are these S and red arrow, or this green and B sign. So they actually do mean something. So in the case where there's a sell-off, you can see the S actually does mean sell, and the red arrow indicates that the price is going to be dropping off in the near future. And that is exactly what happened to the global markets at that time when we got that signal. So it wasn't just Japan. If you look at the US XPX 500, you can see that the market also did drop off during that period. Also, the NASDAQ that controls all the technology companies in the US, you can see we had a major drop-off. If you look at the French market as well, there was a drop-off in the French market. The UK market also experienced that huge drop-off, German market. So it was a global event. It wasn't just restricted to the US alone. So now, again, we're trying to see, is this sell-off over? So the current primary indicator that we're looking at on my chart indicates a green arrow and a B sign. So this is telling me that there is some kind of buy pressure coming in at the point where the market did drop off to this level on the index, about 30,600. You can see we had a buy pressure coming at that support level, and now we're beginning to see this signal indicating that the buy pressure is going to remain consistent. Now the next thing I look at is my baseline. So my baseline is this red and green line. So the baseline is relative to the trend. So if it's a sell, you will get a red color, and if it's a buy, you will get a green color. So imagine, you can see during the sell-off, we had a red color, and you can see that the price was also trending below the baseline. So in a situation whereby we're beginning to get more of a buy, what happens? The price starts to trend above the baseline. So that is good. So we have good confirmation on my primary indicators that the sell-off might be done and we might beginning to see some relief in the market. But before I go, or before I make that conclusion, I also need to look at my secondary indicators, which typically go below the chart. So these are my secondary indicators, and I'm actually going to zoom in on them. So let me collapse this so you can see them properly. And the reason why I use these two different kind of indicators is because I want to see some type of agreement between multiple interpretations. I just don't want to use one indicator. I know a lot of people can be very lazy in this market. I used to do it before, where you want to use just the RSI and stochastics to just pinpoint when to buy and enter. But I'm sorry, it doesn't work that way. But utilizing multiple indications and combining them to see an alignment between them is always a surefire way or better way to interpret the market. So what am I saying here? So the first thing I want to look at is my zero line indicator. So my zero line indicator is a zero line. You can see it right there. So in a situation whereby we were experiencing a sell-off, the signal line was trending below the zero line, which is what's supposed to happen. And in the mini situation whereby we begin to see some buy, what's going to happen is that the signal line will now start to go above the zero line. So we're going to be getting more of a negative number if there's a sell-off, and we're going to be seeing more of a positive number if there's a buy. So you can see the current situation is that the signal line is now trending above the zero line. So we're going towards the positive side. So that is telling me that this is a buy. So now I just don't want to use one. I want to look at a couple other indicators. So let's look at this one. So this one compares two different lines as compared to the last one. This one is looking at two different lines, a slow line and a fast line. So the slow line is the red line. The fast line is the green line. So if you do have a sell, what's going to happen? The red line will be greater than the green line. And if you do have a buy, the green line will be greater than the red line. So you can see at some point there was a crossover, and you can see that the green line now is above the red line, which is indicating some type of buy pressure as compared to when we're seeing the sell-off in the market where the red line was above the green line. I hope I'm making some sense. Now let's look at one more again. We need to use multiple indicators just to give us that extra confidence that we deserve to confirm that this is actually the signal that we're looking for. And this is the last point. You can see during the sell-off, we did have a red arrow pointing down, and we had a couple of red bars telling us that the sell-off was continuing to happen. And immediately we start to see that buy pressure. See what happens. We saw the green arrow pointing up, and these transparent bars or white bars indicating that the buy pressure is actually coming into the street. So I do like the fact that the current market situation might actually be changing. So let's, like I said, we just don't want to look at Japan. Let's look at other markets as well. And as a matter of fact, you can even see that the current Nikkei index is showing a crossover right now. So you can see, let me zoom into this last one. You can see that we're seeing a current crossover right here. So this is telling that the market trend is even getting more and more bullish as the day goes by. So we need to continue to stay in this market. Remember, the trend is your friend. Do not deviate and try to use your emotions. Use your trend indicators to kind of like predict what you think the market is currently doing. And so now let's look at other markets. Like I said, I'm looking at XPX. So with the XPX, you can see the zero line again is above, but the signal line is above the zero line. You can see the green is above the red. We're getting the green bars, and you can also see that we are seeing this green line above the red line. So that is also telling me that's the buy. If I look at the Nasdaq 100, you can see that the signal continues to remain the same, very, very consistent. And in fact, I like this new indicator that I'm looking at. You can see we have a low, mid, and high line. You can line. You can see that whenever this purple line crosses that mid level, you can see that this is somewhat the bullish level, and below this middle line is somewhat the bearish level. So I like the fact that this line is crossing above that middle. So I'm seeing a lot of bullish cases in the market. So I'm long in the market. I'm back in the market. I'm long in the market. As a matter of fact, I actually bought the Japan 225, as you can see on the screen, when this price actually went above my baseline at this entry, which was Monday, 12th August 2024. So you can see I actually made almost $2,000 just from that move, from this point to this particular point that we are right now. So I like the market going up. I will continue to hold, and again, using technical indicators to to predict what you think is going to be, to predict what is currently happening is always a good way to actually trade the market. So thanks for watching. So there you have it on the charts. Are we witnessing the end of the carry trade, or is this just one of the most ultimate bull trap ever? Remember, the trend is your friend until it's not. Then you bend. Well, actually, I just made that up. But before I sign off, here are a few quick trading nuggets on the 5 key components of trading psychology. Number 1, discipline. The ability to stay disciplined and stick to your plan. Number 2, perseverance. The drive to keep trading through both good and challenging times. Number 3, patience. The skill to let your setup or algorithm do its job without interference. Easier said than done, I know. Number 4, initiative. The capacity to predict moves, which often comes with experience. And number 5 is actually experience. Mastering the above components often requires experience. Incorporate even a portion of this into your trading psychology and you will likely see significant improvements. This is your boy, Cincy, aka Mr. Good Vibes, and let's make some small money together.